If you want an exposure to a market or an asset,
Everything they need in one place.
the world's foremost authority on
Individuals, advisors and institutions.
If you're looking for equity ideas, it seems you can't go wrong with Richard Buxton. Richard runs one of the most popular, highly sought-after funds in all of the country, the Schroder UK Alpha Plus Fund. And our Morningstar analysts have said the fund is, quote, one of the best UK equity funds around. Richard joins me now to talk about his investment strategy, his investment ideas, and his top picks. So, Richard, thanks very much for coming in.
Not at all. My pleasure.
Now, you run billions of pounds, and what are you looking at when you're looking to invest? There must be a bit of pressure there. What's your investment philosophy?
Well, essentially it is trying to make money for my clients, for the investors. I'm looking at companies on a very long-term view. I'm not a trader. So I'm investing for a 3, 4, 5-year time frame. I may spend months gradually building up a position in the portfolio. But what I and my team are trying to do is identify companies where we genuinely think that the market has underappreciated the growth potential, the turnaround opportunity. And, you know, I build a concentrated portfolio. It's not related to the index, so it's going to be a bit more volatile than the index. In the shorter term, but in the long run, you know, the evidence suggests that we can identify those companies that deliver a return.
Okay. Now, let's talk about your top equity picks right now. We have Drax, Lloyds Banking Group, and Ladbrokes. So let's start with Drax and why you like Drax.
Drax is a coal-fired power station up in Yorkshire. It supplies about 7% of the country's electricity. Now, the electricity market is actually tightening at the moment because a lot of old coal-fired plant and some gas-fired plant is coming to the end of its useful life, and these things are closing down. So there's actually a shrinkage of capacity. In addition, the Drax have been spending a lot of time and money in converting some of their stations to biomass-fueled. Now, the government, they've spent a lot of time working with to get the right level of incentive to switch from dirty coal to clean and green biomass. And we think the efficiency of the plants doesn't drop by as much as people have expected. That actually, you know, there's a real win here for the country and a win for the company in terms of the level of profits that they're going to be able to generate from converting to biomass.
So this is a bit of a sustainability play as well.
It is a bit of a sustainability play as well.
Okay. Now let's move on to Lloyds Banking Group. I understand that you like most of the UK banks, but Lloyds Banking Group in particular, why do you like them? Not everybody likes the banks right now.
No, very unpopular. Well, we bought a lot of banks during the financial crisis, you know, as they were falling very, very heavily. We fully accept that they've needed to, you know, rebuild capital. They've had to raise equity. We fully accept that they've got to take losses on a lot of legacy loans, and this is a multi-year process. But if you are patient, they're making a lot of progress in terms of reducing the size of their balance sheets and the leverage, in terms of taking the losses. And actually, at the core, there is a business here with strong market shares, capable of generating a good return on equity. And ultimately, the process of taking losses does come to an end. And so if you are patient and prepared to accept it's going to be volatile, then underlying, we think, you know, there's a really good business sort of waiting to come out.
And Barclays is another bank that you're also looking at.
Barclays, we also like it. It's different because it has still the investment banking arm, whereas Lloyds is a pure retail consumer bank. But again, the new chief exec, we think, is doing absolutely the right things in terms of refocusing the business, changing, you know, the standards by which it operates, and pulling out of areas that frankly it shouldn't necessarily have been in. So no, we're enthusiastic about all the UK banks, but they're slightly different stories in each one. And Lloyds is my biggest bank position.
Okay, and now let's move on to your last top pick, Ladbrokes. That seems a little bit odd to me that you'd be investing in gambling, essentially.
Yes.
Yeah.
Right.
Okay, tell me more.
Well, Ladbrokes is one of those situations in the portfolio where there's always 4 or 5 stocks where you're backing a new management team that has gone into a poorly performing business. Ladbrokes was clearly underperforming its peers like William Hill and Paddy Power. So there was some basic stuff they needed to do to actually improve the level of profitability in the business, and they're some way down the road to doing that. But in addition, the market has worried that the traditional high street bookie is in structural decline. Its customer base is perhaps aging. There's less money being spent on gambling. Maybe it's all going the way of the CD and the record player. Now our view is, well, no, actually there is a whole new generation that is learning to bet in different ways. It's via the mobile phone. It's online. It's betting on football during the match, etc. It's not just greyhounds and horses. And they've been investing a lot of money in the technology to actually enable them to capture this new audience. So we do think that there's scope for the sector itself to re-rate as people accept that it's not an industry that's in structural decline.
Okay, there's a whole new generation of people willing to lose money
Willing to lose money, which is fantastic for shareholders.
Okay, now let's talk about key risks. One key risk per company. Drax first.
Well, Drax, if the regulator, if the government changes the incentive scheme for the biomass, that would materially change the argument.
And what about Lloyds?
Lloyds, it's either just if the economy deteriorates and the losses continue for longer, or probably if the regulator decides that they do need to raise more capital today. We think they can rebuild their capital ratios through retained earnings over time. But if the regulator was absolutely determined to say, no, you have got to go to this capital ratio today, they would probably need to raise a little bit of additional equity.
Okay. And what about Ladbrokes? What do you think is the key risk there?
Again, it's probably government. If they decided that they wanted to increase the tax take from bookies, it's quite popular if Daily Mail headlines about new generation of addicted gamblers. It's quite an easy win for them to actually change the regulatory basis and the tax take.
Okay, thank you very much for coming in today and sharing your top picks.
Not at all, my pleasure.
That was Richard Buxton from Schroder's. I'm Alana Petrov. Thanks for watching Morningstar.